Today, I want to talk about how Citadel has just accepted another bailout, taking a $400 million loan at sky-high interest rates. Citadel is in big trouble and they're desperate for cash as theirs is all tied up in positions they can't close out from. So stay tuned and let's make some money. And now I'll dive straight in with the key information. So, Boss Bunch tweeted saying Citadel needs another trading loan from Bank of America and referenced this screenshot from Bigham's. It says Citadel Securities launched a $400 million loan on Monday, with proceeds to be used for general corporate purposes, including trading capital. The new debt, which holds the lowest rung of investment grade ratings, aka junk debt, will be added to the company's existing $3.54 billion loan. Bank of America is leading the transaction and institutional investors must decide if they will participate by Wednesday. So Citadel already has $3.5 billion in loans and is now taking out even more, with the rating of junk debt, which is incredibly risky, in a sky-high interest rate environment. It's important to note their debt isn't AAA rated in a federal funds rate environment of 0% interest. Their debt is the opposite of AAA rated, it's junk debt, and we're also in a sky-high rate environment. Obviously, if you've been living under a rock, we currently have the highest interest rate in over 20 years. So Citadel isn't trying to pay down their existing debt, they're actually taking out more debt because they're desperate for cash. You may remember back in August of 2022, Citadel Securities borrowed an additional $600 million. Back then, that was to bolster its balance sheet and trading business. And if you didn't already know, successful companies don't need to bolster their balance sheet. They have a successful balance sheet as is. And again, that's not all the bailing out Citadel has done over the last couple of years, as they recently also accepted a $1.15 billion investment from Sequoia Capital and Paradigm. That was back in January of 2022, so in just the last year and a half, 2 years, Citadel have accepted almost $2 billion of external help. External help in the form of external investments and external loans. If Citadel was flooded with cash and they were successful, surely they'd be using their own cash for free, not paying sky-high interest rates to borrow cash elsewhere or selling off portions of their business to external investors. Investor Turf also added, saying in 2022, Citadel got a $1.15 billion bailout from Sequoia and Paradigm, their first outside investment. They also took that $600 million loan, deceiving investors about performance. And now saying in 2023, Citadel Securities has just secured a $400 million loan, adding to the debt, still deceiving investors and the media. And this last point actually is very, very important. Don't forget the media is going to report positive things about Citadel securing these external loans. Remember Jim Cramer saying live on air, you can't ever say anything negative about Citadel. He said even if Citadel is down 50% for the year, he must say that Citadel is doing great, Citadel is successful, nobody worry about Citadel because Citadel is fine and Citadel is great. He said if you don't say that Citadel is great, well, that's very, very bad. So guys, be sure to expect the media to hype up this $400 million loan, saying that it's excellent. Ken Griffin desperately needs external money. Citadel needing a $2 billion bailout in just 2 years must be excellent for Citadel because, guys, remember, it's very, very important. Citadel is great. Obviously, if you didn't realise, that was sarcasm because I personally believe Citadel is not great, as I'm not the mainstream media and I'm not Jim Cramer. If anything, this shows to me that Citadel is in desperate trouble. But remember, even though I can say what I want, the mainstream media must say that Citadel is fine. Also guys, if you wanted to make a little bit of extra money on the side for some extra Christmas presents, be sure to join the Millionaire Mindset Trading Group where we get daily profits like these. These are all the trades, including the losses that we've taken over the last week or so. Today we had a 49% gain on ADTX. I actually took a 2.5% loss on CCCC, a 25% gain on a BYND call option, and a 10% gain on an S&P 500 option just today alone. You can see here the main aim is to keep those losses few and far between, and also to keep those losses significantly smaller than those gains. And these are the kind of trades we take every single day, like the alert on ADTX in the pre-market as it was breaking through this $6.35 level with news. ADTX then ran 49.5%, and as you can see, the group did brilliantly. Jake locked in 30% on CCCC, which I actually took the loss on. Andy locked in 20% gains on ADTX. Tower Kings locked in on ADTX2, and Dildoza also locked in around $300 on ADTX as well. So guys, if you want to be making daily gains like these, be sure to join the Millionaire Mindset Trading Group, linked in the description below. As Kat added, she said, why would Citadel need a loan which holds the lowest rung of investment grade rating if they're doing so good? Biotech Moose added, saying exactly, he just needs another $500 million loan to keep the lights on and to keep shorting AMC, GameStop and others for a few more months until hopefully retail investors break. And he said if Citadel is hurting after shorting 59% of the South Korean market for several $1 billion in 2022, he said, I imagine other hedge funds are ready to crack as well, especially as South Korea has now banned short selling and is obviously investigating all of those global investment banks for illegal short selling. And as I pointed out earlier, as Rat Toy has also reinforced, he said what moron would take on debt during rising rates? As I said, fair enough taking out debt here in this 0% interest rate or 0% Fed funds rate environment between 2010 and 2015, and again between 2020 and 2022. But why is he desperately taking out hundreds of millions of dollars worth of debt at the highest interest rate in over 20 years? And also, why is he taking out debt not with a AAA bond rating or a AAA rating, but the lowest rung of investment grade ratings? As I said, let's recap. Citadel don't have a AAA rating, nor a AA+, AA or AA minus, nor an A+, A or A minus, but it's somewhere in the triple Bs, that lower medium grade credit. That's the lowest kind of credit or lowest kind of investment grade credit before it turns to non-investment grade. Now, you may have also seen AMC recently announced the completion or the satisfaction of their share issuance, issuing around 40 million shares to raise over $350 million. I've said a number of times on the channel that I'm not a fan of dilution, as every single share Adam Aaron sells for $10 or less is one less synthetic share these shorts have to buy from us. Although while I'm not a fan of this dilution, it is obviously good to improve AMC's fundamentals and, as Pete points out, to pay down the debt. As Pete added and tweeted, he said AMC have paid off $1 billion of debt with no input from movies or other revenue sources, just entirely from outside sources, saying that bankruptcy is now 100% off the table. Here it says, so far in 2023, AMC has raised $865 million of equity capital and lowered liabilities by approximately $440 million by reducing corporate borrowings, leading to over $1 billion reduction in our corporate borrowings since December of 2020. As I said in my video yesterday, having high debt isn't a bad thing for AMC because AMC is such a capital intensive business, but paying down that debt is always brilliant. Paying down debt just means less interest to pay, which means more profitability. If you actually look at the numbers, AMC pays over $100 million worth of interest per quarter. So as AMC pays down more of that debt and potentially pays it off entirely, that's an extra $100 million per quarter of pure profit. It's so interesting to see the two separate tales of two different companies or two different entities. On one hand, we have AMC paying down debt and becoming more profitable, and on the other hand, Citadel desperately taking out more debt and more loans as fast as possible. So guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.